welcome to Power Breakfast on CNBC-TV18 in the Mumbai News Centre. I'm Sonal Bhutra and with me is Mangalam Malu. Hi Mangalam, morning.
Good morning. So, a lot of cues as far as the global markets are concerned. We're keeping an eye out on how the US-China trade developments pan out. But for our markets, we are meandering in that 11,800 to 11,900 sort of zone. So let's see how that takes place in today's trading session. First up, all the top stories that we're tracking this Friday morning. US-China trade uncertainty lingers. Wall Street ends largely lower in overnight session, while Asia is mixed in early trade.
2 months after the PMC bank crisis, government moves to make Banking Regulation Act the umbrella legislation for cooperative banks. Sources say government does not want loose regulation and the RBI is likely to get more powers.
Vodafone Idea posts a loss of 51,000 crore rupees as it makes provisions to pay the AGR dues as per the Supreme Court order. The company says it is in the process of filing a review petition, adds that the ability to remain a going concern is dependent on obtaining reliefs from the government.
And Bharti Airtel reports a loss of 23,000 crore rupees for the second quarter. This as the company makes provisions for 28,000 crore rupees for the license fee and spectrum usage charges based on the Supreme Court's AGR verdict.
And in a big day in the Supreme Court today, the final verdict in the SR Steel IBC matter will be pronounced by Justice Nariman-led bench at 10:30 a.m. The Apex Court will rule on the legality of an NCLAT decision ordering all creditors, operational and financial, to be treated at par in sharing the proceeds from the sale of the ailing SR Steel. All right, let's take a look at the Asian markets. The Asian markets actually now have moved higher. They were earlier mixed in trade following a record close overnight on Wall Street for the S&P 500. Markets remain on the edge amid uncertainty over the state of US-China trade negotiations. However, reports and commentary flying left, right and center. Yesterday, the most popular of them was the one that came in from Financial Times, which indicated that both sides are actually in deep discussions with regards to phase one of the deal. And this morning as well, we're getting some commentary from the White House economic advisor Larry Kudlow saying that US is indeed getting close to a trade deal with China. As a result of which, the Japanese index higher, the Korean index opened about 0.2% higher, now has moved to the high point of the day. Big moves in the Taiwanese as well as the Straits indices, all of them closer to the higher end of today's trading range. And as a result of which, the SGX Nifty as well indicating a positive start. Not as high as the other Asian indices, but remember, over the last couple of trading sessions, we have outperformed the global markets.
Okay, then let's talk about the US markets. On Wall Street, US stocks ended mixed. Amid persisting worries around the US-China trade relations, the S&P inched higher to a record close, while the Dow Jones closed marginally lower and the Nasdaq Composite was quite flat with a negative bias. On the data front, weekly jobless claims reached 225,000 last week, their highest level since June. Meanwhile, US producer prices had their biggest gain in 6 months in October. CNBC's Frank Holland gets to wrap up all action on Wall Street.
U.S. stocks finishing the day mostly flat. The Dow, the S&P, and the Nasdaq all pretty much unchanged for the day. Walmart's quarterly earnings beating estimates while their sales fell slightly short of estimates, but a strong grocery business helping Walmart's online sales grow by 41% in the third quarter, and Walmart raising its annual earnings outlook for the second time this year. Consumer Reports putting Tesla back on its recommended list after pulling Tesla from its reliability survey altogether last year. Improved reports from owners of Model 3 and Model S vehicles were enough to convince Consumer Reports to once again recommend both vehicles. Tesla still ranks in the bottom third of the 30 auto brands that are rated by Consumer Reports. And free may be the key to future profits for brokerage firms. Charles Schwab says new account openings rose 31% in October from the prior month, after cutting stock trading commissions down to zero. Other major firms, they quickly followed, and shares of those companies took a hit. Analysts say zero commissions may be the only way to get younger investors in the door. I'm Frank Holland. That's the action from the U.S. market. Back to you in Mumbai.
On that note, here is some opinion on the road ahead for the US markets.
Global diversification, when you have got risks of the level that we are seeing globally, it is not the time to be putting all your eggs in one basket. So that means US, Europe, emerging markets, there are benefits, all of them. But we would still say that, look, given all these risks, you need to be defensively positioned. So that's defensive sectors, that's mega caps, which do tend to insulate you from a number of the trade concerns that are rushing around the globe. So I think that's going to be really key for all investors around the world.
Seems like every time the 10-year gets very close to 2%, that there's a lot of demand that comes in to add duration, right? And so we do think that there's a bit of a ceiling there for 10-year yields, that over the next 12 months, they should go lower. But we do not think that there is a recession or a big market fall in the cards. It's really just about the demand that need to hedge some of the risks that are still prevalent for 2020 that puts a bit of a ceiling on the 10-year.
The mood in Washington today certainly does not seem conducive towards a deal. There is, of course, a reading of the Chinese data, which suggests that the Chinese economy is weakening, suggesting the U.S. may have more leverage. And just today, the U.S.-China Economic and Security Review Commission put out a report basically bolstering the hardliners' position that China needs to be taken to task on a variety of its economic and trading practices.
Right, and across the Atlantic, the European markets, they as well were on the edge on account of the trade tensions that we saw, and all of them ended lower. The trade tensions between US and China, at the time the European markets closed, or while they were trading, indicated that there was a bit of a roadblock, and thereafter we saw the recovery in optimism and also in the US markets. But the European markets ended lower. In terms of data that we got, the German GDP, that grew by just 0.1% in the third quarter. The Street was expecting a contraction of 0.1%. So a mild growth meant that they narrowly avoided a technical recession. In the second quarter GDP growth for Germany, that was revised down to -0.1, from -0.1 to -0.2. A handful of stocks in focus. Daimler, the German automaker, was lower by about 3% as the company announced a cost-cutting program as well. So it was more about Germany than the other European indices. The German index, of course, lower by about 50-odd points.
Okay, then let's talk about the currency space. The dollar holds steady amid fresh signs of a global economic slowdown and little progress towards a China-US trade truce. Meanwhile, safe haven Japanese yen strengthened versus the US greenback.
In the world of commodities, crude oil prices ease pressured by a build-up in the US crude inventories and record production, while forecasts from the OPEC nations offer a lower than expected oil surplus supports prices.
Okay, on that note, let's take a quick break. Up next, we'll get you all the cues you need to know for trade this morning. Stay tuned.